So we saw a very substantial sell-off the past 2 days, and it finally happened because I have been referencing this now for the past couple weeks, especially throughout this consolidation time period. This ended up acting as a form of distribution, which, by the way, you can see over here in the dark pool levels feature. If you go back to Tuesday of this week, we actually got that 3 billion plus print that I had been looking for and referencing in past videos. If you are subscribed to the channel, which if you are new here, do subscribe below. I have been mentioning how I wanted to see at the very least at least one 3 billion plus print in the dark pools, at least for a signature dark pool print before heading lower, and we did get that on Tuesday, so very nice to see that. But going back over to SPX's chart, we get a very nice rejection right off of this yellow line right here, literally right off it. At least we closed Monday on this line and then had a gap down after that, and so far this move has been impulsive to the downside, which typically is an indication of a trend change. In this case, the trend is changing to more downside momentum, which is very nice. And on top of that, over here, if you look at this other arrow I have, you can see that there was a previous breakaway gap that formed all the way back here between March 30th and March 31st. We ended up filling that today, which is very pivotal because not only is this move impulsive so far, we had a gap down that's been unfilled. We actually have two gaps that have been unfilled so far. The one from over here between April 19th and April 20th, as well as the one between April 24th and April 25th. And also this move has a lot of red candles to the downside. We've just kind of torn through the supports. So that is a characteristic of an impulsive move, which again indicates a trend change. But also we filled one of the breakaway gaps from the previous upside move that we had. So this is very critical because that means that the trend has been confirmed to the downside now because we were able to fill a prior gap up. Because remember, whenever you see gap ups like we saw in this structure over here, we saw three major gap ups to the upside. We know that there is a lot of bullish momentum whenever you see something like this. But once those gaps are filled to the downside again, that shows that that bullish momentum that once was there is now exhausted. And of course, there are still two gaps to fill to the downside here that were a part of this breakaway structure, but still filling the first one, very critical there. I do actually expect there to be some form of a pause/bounce around this range, just because 4,050 around this level is a good support range. I do have a critical demand zone around these levels, so I do expect there to be some form of a pause at the very least /bounce. It's not going to be an extreme bounce. The absolute most I could see this going would be about 4,100 before continuing down again. We still have yet to retest 4,000. That's my expectation, at least for the first leg of this downtrend that we just started. So I expect somewhere around 4,000. Maybe it's taken a little bit less to around like the 3,985-ish level, but within that 15-point range, that's my expectation for the first major leg of this down move to be. But first, it will pause around this range, maybe bounce for a day. We did see Meta earnings come in after hours, which helped prop up the market just because it spiked off of earnings. So there's a potential that you could see a bounce from that, especially in the future session. But as of now, very nice start to this downward trend. I still am bearish that we will have continuation here. Like I said, 4,000 would be my target, and kind of be iffy with FOMC approaching, at least for the timing of when that will happen. But that's my expectation for this first leg. So sometime within the next 1 to 2 weeks or so, that should be the case where we retest that 4,000-ish level. So that is my goal for right now. And you can see over here on SPY's chart, there's actually something very interesting. Look at where these green circles are. This is a key distribution pattern that not only was present here, but also if you go back to the previous time we were around these levels, all the way back in February before we had that first downward trend that went all the way down to around the 3,800s. You can see here we had a very similar set of price action where you had that spike down and then it was followed by a slow grind up. You saw a gap down over here, slow grind up, gap down, and then a slow grind up. However, in this last sequence over here on February 16th, the gap was not filled to the upside despite the slow grind up that we saw previously in the other two sequences. And then we had a large sell-off at the end of the day, followed by a gap down. And that's what started the downward trend that we saw, which did end up being impulsive because of this gap down. We did not fill the gap again after seeing this gap down here, and it just continued to have a lot of that strength to the downside. So there's a lot of similarities to what we saw back here in February compared to right now. You can see, again, very similar distribution pattern that we had up here with those gap downs followed by a slow grind up. For example, over here, gap down, slow grind up. However, as you can see over here, the gap was not filled to the upside, which was the characteristic that was present back in February. This was followed by consolidation for about a day or two, and then we had that large downward move. Started with a gap down that was unable to be filled. So again, very similar structure here. I do suspect we will have a bounce around this range, at least in the very short-term period, not only based on a key demand range that I have around this level, but also that's similar to what we saw from back here. We saw some form of a bounce around these levels after having that initial gap down consolidation and then a bounce up, but then it continued to the downside shortly after. So it looks something like that, probably more extended in terms of the time to actually start the next downward leg, but the principle applies. And also noteworthy, I have a turn date on May 3rd. This is part of the 18-day cycle that I've shared on this channel before. So keep that in mind. I will let you guys know about that as we get closer. Remember, whatever momentum we see going into that date, it tends to reverse to the opposite direction. For example, back here, the last time we saw it, we saw the momentum going down into that date of April 6th. And then we had a reversal to the upside right after that. And that's characteristic each time for this cyclical pattern. Same thing applied over here. The trend was down going into this date of March 13th. And then boom, this ended up being the bottom date. And we continued to the upside afterwards. So it'll be a very similar concept on May 3rd. So keep that in mind for whatever way we go trend into that date specifically. Additionally, I do want to go over the dark pool levels here because, as I said earlier in the video, we saw a 3.7 billion signature dark pool print at the 4/1255 level. So this most definitely was a large sell, a key sign of distribution. I'd been waiting for this, and I really like how much premium is behind it. So 4/1255, if you look here just at a basic SPY chart, looking up at the 412-ish levels, happened right near the high of day, or at least where we closed the day over here. Because remember, signature dark pool prints are delayed by about 24 hours since they are executed on European exchanges, or at least typically they are. So the rules allow them to show up on the tape up to 24 hours after they actually were executed. So over here, it did happen on Monday, happened at the high of day actually, and then we saw that big gap down the day following with a trend day all the way to the downside. So this was a major sell that was up at this level, and I need to see us stay below this 412.55 level going forward to make sure that this downtrend is intact. Obviously, we are very far below that right now, so my expectation is that won't be retested anytime soon, but still just keep that in mind, at least for a pivot. If we were to go back up above that level, then that would totally change the overall structure that I'm looking at right now. So just keep that in mind. That would be your max risk in a sense. So just so you guys understand what we're looking at right here, because there's no reason for it to get back above that 412.55 level, even though I don't expect it to get anywhere near there anytime soon. But just keeping that in mind, a very large sell, a very nice distribution that we've been seeing. Not only is this a distribution pattern, but also we saw that very large dark pool print up there, which is nice. Additionally, if you go back to Monday, you can see that we had 2.8 billion in premium at the 412.18 level. So 2 days back to back of about 3 billion each, just on average. So very, very nice to see a key distribution. I've been mentioning in previous videos to this one, how I wanted to see those about 3 billion plus in terms of premium, like I said earlier, and we did get that for the first 2 days of this week. And then we had a large sell afterwards. So very nice to see that. And so far we've maintained below those levels by quite a bit, as you just saw from right over here. So I really like the positioning that we're in right now. Again, there's still potential that we see some chop, pause / bounce around this range, because as of now it is overextended, at least on these short-term oversold levels. But overall, this is a nice downtrend that has been established and finally is starting to pick up here. And one last note I'd like to mention in this video, we did see a very nice rejection over here on Monday of this week for QQQ. A nice rejection off this yellow trend line, actually exactly off this yellow trend line. This is from the ascending pattern that we had previously. And I'll just show you guys that very quickly here on the daily chart. But it's within these two yellow trend lines. So this one is the bottom support, and then this one being the top resistance. We had a hard rejection right off of that resistance. And so far, this is a fake breakout with a double top pattern. We have the double top here. These are this early April date, as well as over here for the April 18th date. We saw rejection off both of those days, and so far it's continued back into the pattern. So this is a fake breakout with a double top. So that is a bearish pattern, despite the fact we saw bullish earnings in terms of price action of Meta, Microsoft, etc. This is still a bearish pattern. So far, the NASDAQ is the strongest of the indexes just because of those earnings, like I mentioned earlier. So wouldn't be surprised to see another retest of that level. But as of now, the fact that we are are below it, again, it still has that bearish emphasis. That would be about the max move that I would see to have some form of a retest if it were to be the case. It doesn't have to happen because we still are within a fake breakout reversal pattern. So the target of that would theoretically be around this 304 to 306-ish range to touch the lower end of the ascending pattern that I just showed you on the daily. But still, just keep in mind this is showing relative strength because of the recent earnings we've seen in comparison to the weakness, for example, in the Dow, the S&P 500, as well as the Russell Index. So just keep that in mind. Otherwise, great start to the week, and I will see you guys next time on Sunday.